You have disclosed everything externally, but when can I make profit? And external reporting is purely for government purpose or your public investors for their purpose. But internally, as an organization, I wanted a detailed report of every activity that I am performing. So if I have the details of, okay, I'm incurring so and so cost if I do some so I'm manufacturing a car. In the assembly line process, for painting, I'm getting this much of cost. For engine manufacturing, I'm getting this much of cost. For glass fixing, I'm getting this much of cost. For fixing the doors, I'm getting this much of cost. For fixing the electrical equipment inside the car, I'm getting this much of cost. For audio system, I have to procure from a different company. This is of this much cost. So like that, there will be many details that are involved in the manufacturing process. All these are, all this will incur a cost. You will incur profit only during your sale. When you sell the products to your customers, then you will get a revenue. But that is, you get some revenue, but expense, you will incur it at every activity that is done in the organization. More or less, all the activities, 95% of the organization activities will incur some expenses. If you manage this 95% of activities efficiently, then only you get profit. And to get this profit, we need to account them properly. We need to account all the activities cost that is incurred across my organization. For that purpose, I have something called as management accounting. This is for my internal reporting. Okay, this is purely for internal reporting and it is purely focused on internal activities of the organization. Coming to the sales activities. So sales is also again a division for any organization. So when you are doing sales, you can do it from multiple locations. Suppose, for example, you can do the business with a local customer, you can do the business with an international customer, and the rules will change, the legal framework will change, and the competition will change, your competitors will change, your players will change and the regions. For example, you are manufacturing in a particular location. Now you wanted to ship the product internationally. The logistics and transportation cost will increase. So, if in case your sales activities are more happening internationally in a particular country, your product is liked by all your customers in that particular country, what do? You will establish a manufacturing plant there. Now, there might be some other country from where again a third country where your customers are increasing. So now you have the choice. You want to ship from country one or country two. Earlier you had only one single business in one particular country, but now you have business in two countries. So now a third country customer is there. Now you have a choice whether I should deliver the goods from country one or country two, whichever is giving me lesser cost of manufacturing. Suppose, for example, we all know that in the today's world market we have big major powers like US and China. US designs all the products, be it it's Apple phones or all the technology. They come up with the latest technology and design all the latest technology. But the manufacturing happens from China. Why? The cost of manufacturing is very less. The scale at which the Chinese companies manufacture is a lot and it is a manufacturer driven country. Whereas on the other hand, on US is not driven on manufacturing, they are driven on innovation. They will innovate the new things, they will launch the new things, but they will not manufacture it. They will give it to third party countries, but they will keep the bigger share. Right? So you'll also have some manufacturing plants in US, but that not might be so great, or they will not be in great numbers. They will do it in less scale. So, why this companies perform sales activities? There are n number of reasons. It might be the labor cost, it might be the legal framework, it might be the technical talent that is not available, it might be the raw material availability. So, there might be n number of reasons. So, all these reasons put together, your sales department is also structured in a way how you are going to push your product to the market. There might be n number of processes for that. For all the sales activities, we have sales and distribution module in SAP. Sales and distribution modules. SAP. Same way. Now, in the during the sales, what do? You will keep moving the materials. The materials that you deal with in organizational activities are raw material, semi-finished material, finished goods. You will have trading goods. Trading goods is something which you will not directly manufacture within your organization, but you buy those goods from third-party sources and then sell it to your customer for profit margin. So you don't manufacture such kind of goods in-house, but you are doing it for profit. So that kind of materials are called trading goods. Sometimes you have to do those for your customers. So in such scenarios, you will also deal with trading goods. So all these materials, you need to store them in warehouses. They wish you moving them from one place to another place is a physical activity where you will incur some cost and store them in the warehouse. You will incur cost. Store the raw material, you will have a different cost. Storing the finished goods, you will have a different cost. Moving them from one place to another place via railways, roadways, airways, and there will be many challenges in moving this as well. So all those material related uh, handling are comes under your material management. And the major part lies in procuring of the raw material. Material management more deals with procurement of your raw materials. This is the prime focus on this material management module. Apart from that, there will be many settings, and you can't separate. Unlike your finance, you can't separate your sales, PM modules, logistics modules. More or less, all of them will work together. That is the reason in the last class I have shown you that SAP has grouped them all of this under logistics module. So these are all considered as logistics general activities. Within the logistics, yes, if you ask about the transportation point, shipping point in particular, then that kind of logistical movement activities are handled in logistics execution module. So you have a few more modules like production planning, plant maintenance, quality management, uh, project systems. There are many more modules. And apart from that, coming to the finance modules, apart from financial accounting and management accounting, one more widely used module is FSCM. FSCM is nothing but it is financial supply chain management. It is not your material supply chain management. SCM is different. FSCM is different. This is financial supply chain management. So what it does is it will manage the credit cycle in the organization, credit cycle in the cash flow. You can say. Now, apart from this finance module, within the finance, we have nowadays something called as central finance. We also have investment management. We also have REFX, real estate management. So, if you keep going further, there are many more modules with respect to that. But as an overview at a high level, this would be sufficient. Now, coming back to finance, as this course is designed for finance. Now, if we go for further into finance, what